Well, hey, let's go ahead and spend some time talking about it. We're getting ready to have the FOMC meeting is going to come about. So, gonna see if there's something of interest to discuss. Yes, forwarding the information so we can invite the people in so we can discuss the FOMC, see how the market starts to move as a result. Let me share my screen. I want to do the S&P. Let me see. Gonna go off of see what SPX is doing. I'm taking us to a shorter time frame. Maybe we'll look at the 2-minute window. See what's going on in there. This is what the market has been doing today. This is a 2-minute time frame. And we started off this morning. Opened around 46.46. We had a nice little run up. It looks like it got up to about 46.55. Decided that was far enough. Came down, filled the gap from the morning, and decided to go on back up. I'm going to go with triple Q over here. See what triple Q is doing for the day as well. Is that triple Q? Yes, it is. Nope, I want a different time frame. Maybe we get 5 minutes in here. 5 minutes for the triple Q. The chart doesn't look quite like SPX, but it's not too far off. These two charts are the difference is this is a 15-minute chart over here, and this is a 2-minute chart over to the left. SPX is a 2-minute chart, and triple Q is a 5-minute chart. Gonna see some stuff look a little bit different over there. Let's see. Let's see. Let's just see. Need to turn on some music. Otherwise, it'll feel too quiet. Too quiet. Nope, not there. Music. Let's see what we come up with. Michael Jackson and Prince, that. Let's see if we can hear it. I may need to turn off my earbuds. You should be playing. Why don't we hear anything?
This groundbreaking plant method is helping people lose weight.
We're hearing some stuff now.
Doctors have developed a method that triggers your body to burn calories.
Okay, let's get. At 2:00, we're going to have the meeting of the FOMC is going to put out their minutes. Hey, everybody. And I'm interested to see how this goes. Generally, those FOMC minutes create some volatility. Hey, I'm thinking I might need to find me something that's since I'm live on YouTube, let me find something that is royalty free So they don't start worrying about, they'll start copyrighting the video. That's not what we want. We just needed some upbeat, royalty-free music. Oh no, I didn't want that one. Something that's upbeat. Oh, that says free background music. Well, that doesn't sound bad. We'll see how it continues. Generally what we do, Curtis, is we look at, we have two ways that we play the FOMC day. So my community will, if they trade in the morning, they will do what's called the PDT hack. And really it's a way, it basically locks in your profits. So you can put on one trade, put on an opposite trade, and that locks in your profits without you having to use a day trade, and that basically locks your trade, or locks your profits for the remainder of the day. If they don't get their trade on with the PDT hack, then they go and they wait till after the minutes are released to make a decision as to what to trade. Some folks will just, watch for the day or maybe trade other things. It's kind of a mixture. So the PDT hack is a way to get around the pattern day trader rules or pattern day trader designation. If you don't have 25,000 in your account, then you'll be designated as a day trader. You get to do 3-day trades in a 5-day window, but we trade stuff. We trade stuff that is daily expirations. So Curtis said, "Yeah, the PDT hack is fire. My brother bought me the book for my birthday." Oh yeah, that PDT hack is a good way to do all the day trades you want. I'm going to tell you where you can find it. You can go get a copy of it. It's actually on sale. The PDT hack is on sale, or you can get it in the midst of the SPX playbook has the PDT hack in it. Or if you only want the PDT hack, you can go get it from my website. It's only $17, but it's a way for you to be able to do day trades without getting charged for the day trades. Especially if you're a seller, which if you're buying options, then, if you have a cash account, you can open and close those as often as you want without any issues in a cash account. But if you're a seller or you're selling spreads, you can't sell spreads inside of a cash account. So you then need to be in you need to have some other way to protect your day trade, especially if you want to trade a 0 DTE stock like we do. We trade SPX and XSP, which those are 0 DTEs, right? So that's how we do that. And you have to have a way to protect yourself from anybody who's been in PDT trouble. I have in the past. That's before I really knew, before I knew what it meant, before I knew what pattern day trading was, or that there was a day trader problem. Before I realized what it was, I was in trouble already. And once I realized it, and the PDT hack came our way, we fine-tuned it to make it work for what we have. I did not come up with that on my own. We saw it somewhere else, but it was being used differently. So we took, I took what was found and worked out a system that works for us, and we've utilized it. Y'all see how big that 2-minute candle is right there? Oh, now it's green. Now you need to keep in mind that this little jump around, you have to give it a minute for it to settle down, because you'll see a run one way, then it'll run the other way. Then you want to let it settle down, so that way TOS, use a day trade to get out of my triple Q 0 DTE spread. TOS support explained the reason, but wondering if it happened to anyone else. What's his name closed it for you? The broker closed it for you. Now I've seen them close SPY. I don't really trade triple Q on a daily basis, but I didn't know that they also closed, that they closed triple Qs, especially this early in the day. They closed it already today. Seems a little early for them to shut down your trade like that. Wow. Let me see what I just saw for the FOMC decision. The committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. So another pause, basically. And the market is seeing this extra pause. As a good thing. Oh yeah, the market with the Thinkorswim will close a SPY or a triple Q trade. I'm sucking on a cough drop trying to get this little tickle to go away. Actually, if you didn't know this, SPY and triple Q actually run until 4:15. Okay, so though all the other things in the market close at 4 o'clock, SPY and triple Q run till 4:15. So if you're so even though the options run till 4:15, because those stocks trade after hours, the price can continue to move around. So all of the option stuff, even though you can't make any more options moves after 4:15, it also goes until 5:30 though. The settling of all the stuff is at 5:30. So okay, so let's get our times. Options contracts stay, you can do whatever all the way up till 4:15 on SPY and triple Q. The shares trade all through the night because they're 24 hours. Those are both 24 hours. But the option stuff doesn't really settle until 5:30. So if the broker looks at your trades and your account and they do their whole risk management sweep, which happens about 4 or 5 minutes after 4, when they do their risk management sweep, if they see that your trade maybe is within $1 or $2 or what they consider close proximity to what could potentially get you assigned or whatever, they'll close it. We've had that happen, which is one of the reasons why we switched from SPY and triple Q and we switched to XSP for this same reason. Because of the fact that the broker, you could have good trades going, but the broker would close your trade. And so you could think at 4:15, my trade was good or whatever, or 4 o'clock, you feel like, oh, I finally made it to 4:15 or 4 o'clock. My trade is good. And then you look up and the broker, said for risk management, and all they'll do is buy back the sell leg and leave the buy leg and charge you a day trade for that. So if it may be where your trade is okay, and as far as your money goes, but you want to, I want to pick when I use my day trades. I don't want somebody else picking for me, right? So that's the reason why we switched over to XSP, because it's cash settled and it ends at 4 o'clock. So SPX and XSP, I think there's probably a few others that are cash settled and they stop at 4 o'clock. So with that being the case, that's why we kind of quit fooling up with SPY and triple Q when we're doing the spreads, for that same reason I just mentioned. For the same old reason. Yes, sir. Okay. this cough drop is really helping with the tickle that has started. But look at the market starting to make its move. I'm going to go ahead and switch us to 5 minutes here. I'm not really big, or I don't really know a whole lot about economics, but I'm definitely like getting more interested in how the different things affect other things. You know, how does the PPI and the CPI and the this, the that, and the third, how do all these things affect the what happens in the market? But I feel like the market right now is kind of just doing its thing, and some of it has like no rhyme or reason, because some stuff is just doing, and it's like, so all of it's not lining up with technicals. All of it's not lining up with technical analysis. All right. So this is SPX and triple Q are what's on the screen. And the charts, these charts look almost the same. We're both on 5 minutes. And they look very, very, very similar. Those who were in the credit spread challenge and have T triple Q, which several of us do, those trades may be ready to close. Mine actually has, it's worth $2 now. When I entered the T triple Q trade, I collected $35, $39. Take that back. I collected $39, and now it's worth $2, which is good because as a seller, you want to sell high and buy back low. So we sell high and buy low. Buy low to close it. I could just leave it to expire worthless in 2 days, but if I can close it now and exit out of my buying power, close off my buying power, then why not, right? Or retrieve my buying power, because once you close a trade, your buying power gets reestablished. They give you your buying power back. Okay, so we've had some good, interesting trades for this week. I'm going to switch over to, we've looked at Amazon this week. I'm going to put us on a daily, we'll put us on a daily time frame. This is Amazon over here. We talked about Amazon being in a zone for a while, and it still is. And was trying to come out of this little zone. Well, it's red and trying to come back in. It did break out. We're at 149 and 150 as a call credit spread. That was from the graphic we had from the other day. Let me see if I can find the graphic and bring it back up. Downloads. Okay, so this is what we had as our graphic from the other day. Not that one. There we go. Okay, we had Amazon 149, 150 as a call credit spread. At this point, that is still a good trade. Price of Amazon is at 147, 147.92. Now, one thing I've done, I don't have the call credit spread one for Amazon, but I do have the put credit spread. The put credit spread was 142, 143. And I even think I have something a little bit closer. I think I got into it yesterday, and I have 143, 144. If you're looking at your chart, 143, 144 support. That's in here, right in this window here. And that's based on this big red candle here being the support candle. There's a gap that was, I had this as a gap that was being filled. Don't look like it's being filled anymore. What did I put that there for? You have to have a charting convention, just so if you're a charter, and you should be, listen, if you're not charting, you should definitely be charting. Do not trade without a chart. All right. And if you're not sure about how to chart, you need to go and check out my free webinar on charting. It's at startwiththechart.com. 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 I have to write it out in .com because Some links, Facebook has gotten real finicky on the links, even though it's a full link I paid for. I paid for that website, but Facebook is getting a little finicky. Anyway, the resistance I see now may have moved a bit up to, what's this number here? 148 and some change. I think that was my T triple Q closing. Yep, my T triple Q trade that I mentioned to you just closed. I collected $39 on a 2 spread, and I closed it for $2. So keeping $37 of profits from a credit spread. $37 divided by 200 of collateral is about what, 18% return on about a 3-day trade. We entered that trade. Actually, I had Peakbot. Peakbot entered that trade for me on Monday. Peakbot entered it on Monday. Y'all know I talk about Peakbot. Hey there, Adrian. You can go to, if you want, automated trading. Great thing about Peakbot is you can pick which stock you want it to do. It will enter at the right time. The bot will determine when's a good time to enter the trade. And then, let me see. I'm trying to type and talk at the same time. So it will enter based on when the algorithm says on Monday afternoons. It'll enter a put credit spread. So you got to put credit spread. And I don't know what just happened here. I had 42, because T triple Q's in the 40s, right? 42, 44, put credit spread. And I collected $39 in premiums, which is about actually less than $200 collateral. I closed it today for $2, which is $37 in profits that I got to keep. That's approximately 18.5% return on collateral in, what's this, 2 days? This is why I say that credit spreads can help grow your account real comfortable. That's why I say credit spreads can help grow your account real comfortably. You put up a little bit of collateral, whether that's, and if you're done, one of these, I also have 143, 144 Amazon. So I'm, using $100 of collateral, and I collected, I think, $15 in premiums. So that's a $15 out of 100. So that's a 15% return. Some people will look at that and say, well, that's only $15 that you're receiving from a trade, but I'm leveraging $100 and collecting 15. Again, 15%. If I want more money, if $15 isn't a good amount of money, then if I'm really comfortable with the strikes, then you could do more contracts. Let's say I did 5 contracts. If I did 5 contracts and collected $15 a piece, that's $75, and I've leveraged $500, right? It all comes down to how much collateral do you want to put on the line, right? Let's see what's up with the Google trade. Did anybody do the Google trade from the other day? We talked about, we did the Amazon, and we've talked about that one. The Google trade, Google is on the call credit spread and the put credit spread side as well. We've got 137, 138. Okay, 137, 138 is up here. The call credit spread area, price is not there. And we put on here 130 and 131 on the put credit spread side. And it's not there either. Current price is at 132.54. So that Google trade at this point, now you've got a couple days. Great thing about credit spreads is you can do, you can be into those. You can enter them today, tomorrow. You can enter them all the way up. It says whatever premiums you may be looking to see what premiums are we going to get. Okay, I'm going to do a quick look to see what are the premiums at these same prices. Well, let's do one thing first. If we're looking here to say now with a couple of days gone by, what would be the support for Google? I would now say the support is 131.80 based on this candle here. And the resistance is probably right down in here with the top of this gap. I would really bring the resistance down to the top of this. This is a seller's gap because the price gap down. But there's sellers and buyers hanging around in here. So you can really look to see there's some resistance in here. So we're at 134 is really resistance. So this call credit spread can be brought in a little bit closer. Get a little closer. Let's see what we come up with if we look at the trade. I'm going to switch screens so you all can see what do the prices look like. I think I have to stop sharing in order to share again. I should suggest that as a fix for StreamYard. Okay, so we're on Google now. We're looking at just this Friday. Remember, we've talked about the probability out of the money, this column right here. The 131, if we looked at 131 as our support area, or 130 or 131, we can change this to vertical and see what the premiums look like for this week. And then on the top side, we talked about 134 or 135. It's an 80% probability out of the money. Probability out of the money means this is an 80% chance that this strike will be out of the money at expiration. And we do want to be out of the money as sellers. Buyers want to be in the money. Sellers want to be out of the money. So the 134, 135, the one that we said was just 80% out of the money, probability out of the money, is paying $21 in premiums. $20 in premiums. You leverage $100 and you collect $20. And if you wanted to go up one more move, you could go up to 135 and that's paying $12, which is still 12%. Subtract your fees. So $12 there. And if we went down to 131, that's $20, 130. So what you can do is what's called an iron condor. Iron condor is where you do a put credit spread and a call credit spread at the same time. So if I collect $11 over here on the put credit spread side, and I collect $12 on the call credit spread side, then I'm collecting $22, $23 and using just $100 of collateral. Okay, that's called an iron condor. It's not a bad setup for Google. If you want either side at this point, it's kind of hanging in the middle, so you can, you got a couple days of trading after today to see how's it going. But that Google trade doesn't seem like a bad one at this point. Let's go back to presenting the chart. Okay, come on, do it. There we go. That was Google we talked about. We talked about triple Q, T triple Q. Do we have anything else on this list of interest? What else do we have on this list that is interesting? Where there's some interest here. Did y'all see that Lucid got not deactivated, but taken off the NASDAQ? They got taken off the NASDAQ. No, nobody has any interesting ones here that they're looking at. This is in. Oh, I may not be able to see the screen. Let me see if I can see any comments. See if somebody put some comments up here that I cannot see. Oh, not there. Not there. Not there. Where are you, StreamYard? What are you saying wow to, Lady T? You saying wow to the Google trade? Well, the SP is still moving upwards, seeing that we've had our good news from the market. You're trying to pull up the Google? The Google? Mm-hmm. Let me see. We talked about triple Q already. Let's see. Carvana was on both sides. Let's see what it's looking like. Carvana's the car people. Oh, Lucid. Yeah. Lucid. Lucid. The car people, they took them off the NASDAQ. I think I put a link in our chat this morning. I don't think you're in that chat though, about Lucid. It might have been, if you're in the Educator to Trader, the big chat, you might have seen that I put it there. They got taken off of the NASDAQ this morning. I think it was this morning or yesterday. Yeah, Lucid, not Lucid Technologies. Lucid, the car people. Okay, we were looking at Carvana. Let's see what we got for some charting. I don't think we charted Carvana the other day. I was looking at supports. It would be 37. Looking at some supports, it might be down there. Actually, you probably could go even closer to here in the 39. Yeah, the phone is probably hard to see. And then if I was looking at resistance on Carvana, it would be up here in the 42. But you see, it's been kind of in this same zone for the last 7 days, just kind of chilling after it gapped up. There was a gap up here. Let me turn that into a dash line so I will remember what I put it there for. But the resistance, I'd say, would be in the 42. Let's see, what did I put for numbers for the trades? So for Carvana and the call credit spread side, 35, 36. Well, that seemed like, wait a minute, that doesn't seem right. I wonder if that was a previous, there's no way that would have been, I would have put that. I wonder if that's supposed to be 45, 46. Because 35, 36 is underneath it. I definitely wouldn't have put call credit spread. Put credit spread 34, 35 is accurate. I'm not sure where I got 35, 36 because that is wholly inaccurate, but I wouldn't have put that anyway because Carvana's been on the list for a little while. So I wonder if I didn't update the Carvana numbers because it showed up on this list for a few weeks. I'll have to be more diligent about that. Don't want anybody getting any bad info. So I would look at 42, 43 maybe if I was going to go with Carvana, and I'd look at below 37. Looking at Carvana. Can we look at Mara? We absolutely can. Absolutely can. Mara's at a sell zone. Let's see. Yeah, Mara actually, is it a buy zone or a sell zone? Because when I was looking at it, it seemed like it had dropped down a little bit. Or that may be why it's dropping down a little bit, because it has come into a sell zone. I had 14.5 and 15, which I need to go look at it because maybe it can be taken off. I can close the trade. So I see resistance at 1679 is what I see as resistance for it, and support I see down here where it started this morning, really, 1465. It fell right into it a couple days ago. Yesterday, it just kind of hung in here. But today it's at 1609. It's at 1609. So it's definitely coming into a zone that is resistance and could potentially, but it's almost like now hovering between these two zones. It's got a gap here that it looks like it might have tried to do some filling that gap there. You know what? I can make this one big one. I can turn off the SPX. We can come back to seeing what SPX is doing. Let me see what Mara. Okay, take me to the daily chart. There we are. Looks like Mara's hanging out between two areas. This needs to be green. Between two zones. And there's a little gap underneath here. A buyer's gap underneath here that it is tried to come into a little bit these last couple of days, but hadn't really gone through to be able to feel. And then it's the resistance area 1679. So let's look and see what kind of monies would be there. Let's look at Mara. I'll switch over the screens here in a minute. We're going to look at Mara and we're going to look at Carvana because we didn't look at the Carvana. Mara's not quite at the sale zone, but it's hovering enough to where you might want to maybe put an alert on it. From what do we have? This was Friday. Yep. It basically closed at that resistance on Friday and then it dropped the next day. So we're supposed to be looking at the numbers. There we go. Sorry, y'all. I was looking at the chart still. Okay, let's go look at singles on Mara. The single life. We're looking at the probability out of the money, along with the fact that we know that resistance is at 1679. So that means we're going to want our strike to be 17 or above, 17 or 17.5. The 17 strike is 74%, and the 17.5 strike is 83. Change this to vertical. 17 strike is paying, 17.5 is paying $6. So that would be, that's actually about 12%. This is a 50-cent spread. I'm going to change this to a $1 spread. So there's $12 for a one spread, right? $6 for a 0.5 spread is not so good because you're going to spend $1 on fees. So if you're going to, each trade, you're going to spend at least $1 on fees. So you want to widen the gap if you can and take in more premiums. That's going to allow you to absorb the cost of the fee and still keep some good premiums for yourself. So $12 here with the one spread, 12% return. That's good stuff. Good stuff. Let's look at the bottom. Let's look underneath here because if we're under 1460, so maybe 14.5, right? I have the 14.515 trade. You can see here I have the position. So the probability out of the money for 15 is 82%. 14.5 is 89%. So let's switch to vertical. 14.515 is paying $4. But like I said, I would switch this to a one spread, collect $8. So if you collect $8 from this side, $12 from the call credit spread side, then you're collecting $20 for one, for $100 of collateral. That's a 20% return. 20% return would be there. Okay. We're going to look at Carvana. Anybody got questions about Mara? Do we have any questions about Mara? I don't know if any other. Nope. There we go. Come on back. There we go. Come on back. Carvana. Carvana. Let me put us back on the chart so I can see what numbers we were talking about. But below 37 and above 42.50. So below 37, looks like 37.5. 37 is 80 and 82, 3% probability out of the money. Plus or minus this 3. You know, we use this plus or minus number here. This is the broker saying what they think it's going to move, could potentially move over the next, between now and expiration. So minus 3 would take us down to 37, right? Take the $40, subtract 3 is 37. And then you've got, if we were going to go up, I said above 42.50. So you went up to 43. That's a 72%, 43 or 43.5, which also takes you 3 up. So 43.5. There ain't no money up there. Let's see. 43.5. 44.5. Only pay $16 for a one spread. That is some monies. We'll take that. 43.5 is a little higher than we want it to be, though. Let's see. Let me go back to the single. Because I feel like, oh, there we go. 43 or 43.5. 43. 43.5 is paying $12. A 50-cent spread actually is paying $9. 50-cent spread is paying $12. That's a 22% term return on one side. On one side, 50-cent spread means you're leveraging $50, but you're going to take in 10. That's a 20%. You're taking in 20% of the $50 in premiums, right? That's for that side. And if we looked at below the 36.5, we're taking in $5 there. Again, if you wanted to make it a dollar spread, $11, that's going to absorb your fee, your dollar fee. So if you took in $11 on one side and $12 on the other side, you're taking in $23 already. That's how you have to look at it. Okay, that's how you got to look at this. You got to look to see what's the percentage return you're going to get, as well as the money. I'm not saying ignore the money. I'm just saying you want to look at it with the money as well, especially if you're a seller. Some people are like, well, you know, I don't seem like it's no money. Well, if you're leveraging your collateral, you're not having to be mindful about entering perfectly or exiting before, you know, when you're working credit spreads, you just need it to expire below your strike. And if it gets, when it gets away from your strike or time decays enough, you can close them early with nowhere near as much concern and worry about what the price is doing. You can put an alert on. Let's say you did the Carvana and you have 43.5. You can put an alert on that says, if the price gets to 43, alert me. If the price gets to 42.5 or 43.5, alert me. And then you can go look at it and decide what you want to do. But it's not where these credit spreads don't require tending. You know, they don't require you tending to them all day long to make sure that you exit at the right time and none of those things. That you can select a place where you don't think price is going to come or price is going to go, and that's the strike you pick. So that's the strike you pick. I'm not going to act like credit spreads are like a walk in the park, but they're a lot less stress, in my opinion. When we're, of course, the daily ones take a little more effort and management because that's for the day. Anything happens in the day, your trade can start to move. But if you've got these trades that are going for 3 days or 4 days, then they don't require as much tending. And most of the people in my community have something else that they do during the day, whether that's a job or whether that's a life. Maybe they take care of parents. I've got people in my community who do various things. Some of them just want to enjoy their life, you know, play with their dogs or go out to lunch and not have to be staring at the screens. So for me, y'all know I teach school. So I do have times where I've got a downtime from teaching, but at the windows of time where I'm teaching, the market's not going to wait on me to say, you know, hold up, let me get this class, or something happens in the market. I got to tell my class to hold up. I teach adults, and there's very forgiving, but I also have to keep in mind that basically we're, you know, I'm focused when I'm teaching. I'm focused on that task at hand. I try to be. Okay, I try to be anyway. So, yeah, I wanted to share with us, update our trades for the day from the other day, the things that we had. Wednesday's a great day to enter trades. So you've got the list. I don't think I can put the list in here. I may have to add it to I may have to put it on the screen and then you all can take a screenshot or something. But you've got the list. These can still be looked at for today. You can enter today. There we go. You can enter today with the plan to, oh, let me allow this since it's not really showing yet, doesn't look like, with the plan to exit on Friday. Am I sharing? Oh, I am sharing. Doesn't seem like it. Why aren't you doing something here? There we go. It's delayed. This is delayed reactions. But you can look at some of these to enter today with the exit on this coming Friday. You just saw what we looked at. Google is paying 20%. Carvana's got 20% returns. Amazon, you're looking at 20% returns just between now and Friday. Today we had the FOMC things. If you want to take a picture of this, go ahead and grab a screenshot or something. But today we have the stuff from the FOMC. Tomorrow, I think there's unemployment claims, and unemployment is mentioned in the morning. And I want to say there was something else on Friday that's set to be discussed. Let me go look at the FOMC calendar. No, Forex Factory / calendar. Let's see what's on here for Friday. For Thursday, tomorrow we've got core retail sales and unemployment. That's in the morning again, red folders. And on Friday, we've got Empire State Manufacturing Index and PMI at 9:45. But by and large, the FOMC thing today was probably the most volatility, and the market will absorb it tomorrow some, right? The market's probably going to do some absorbing and it will respond to it maybe some tomorrow. But, you can enter, credit spreads is great. You enter them today with an exit planned for Friday, a couple days in the trade, and you take your money right away. Great thing about credit spreads, you get paid right away. If you haven't subscribed to the channel, please do so. Pass the word to your friends and family about what we do here. We've changed our membership a little bit where we now have a 9:30 call in the morning. So we're on our morning call when the market is open. So we're there to discuss the market open, the market pop. If there's any trades we're going, we got all that stuff happening at 9:30 now in our calls. And we have our Wednesday evening call, which is going to happen today, where we focus on different strategy and trade related things. And then on Saturday, the first Saturday of the month, we do coaching. Do that. You can always check the website educator2trader.com and see all the good stuff we got going. If you're in the credit spreads challenge, good luck to you. Everybody's doing a good job in the credit spreads challenge, just getting lots more comfortable with credit spreads and how to use credit spreads to generate income. We're learning credit spreads now. Many people are. So that way you can comfortably scale it up to, something where you can create some consistent, repeatable income. That's the whole objective of this, is that then you can create some repeatable, consistent income for yourself that does not cause you a great level of stress and doesn't need to be watched all the time. That's the whole objective of all of this, is to allow us to create income for ourselves without the extra stress and without having to watch our charts and our calendars and our screens all day long. That's not what we want to be able to do. We don't want to have to do that. All right. If you need me for anything, be sure to send me a message. Y'all can find me in all the places on social media. Send me an email or send me an inbox, and we can talk about whatever it is. If you need a one-on-one discussion, we can figure that out. All right. So I guess that's about everything. We do two things though. Boom, 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 boom. Here we do two things. Two. We stay green and we get this money. All right. I will see you all in the market. Goodbye, everyone. Goodbye.